Hi guys, really good to have you back here now. As you might remember, just recently I made an extensive study on gold volatility covering something like 17 years of data. Now I have 13 years of data on silver market and something like 20,000 plus observations. So this time I'm going to look at when the silver market moves the most. I have divided the trading day into six 4-hour periods. And I'm looking at each of the periods to see what's the average move in them, what's the bigger than average move like, and when the silver market moves the most. If you are a momentum trader trading the market intraday, this is definitely a video for you. First of all, please do remember that we don't provide any investment advice, and all the material is made available for educational and marketing purposes only. And please remember to subscribe to the channel. That would be a great help. Thank you. So why is a study like this very helpful for traders? To answer this question, I want to briefly focus on the mindset of successful traders. The big difference between winning traders and losing traders is the focus. Most losing traders focus on the current trade and what it will do to their P&L, whether they are afraid or hopeful. They often focus on the outcome of this one single trade that they currently have on. Successful traders instead focus on the outcome of next 10,000 trades. They know that the outcome of one single trade means absolutely nothing. This is why we need to focus on statistics derived from a large sample of data. That will give us the right focus. We need to understand the characteristics of the data, how the market moves, when does it move, and how much it is likely to move. Then that helps us to create strategies that are effective, that have good reward to risk ratio, etc. Okay, so what is this silver volatility study about? Let me show you the research questions. Intraday momentum traders need volatility to make money. The more volatility, the better reward to risk opportunities there are. Therefore, it makes sense to concentrate trading efforts to the most volatile trading periods. In this video, I'm going to tell you when the silver market is the most volatile, what's the average move over all time periods, and when do the greater than average moves take place. I'm going to show you how big they are. I'm going to show you how many of them occur in this data that I have in total, and how many take place in each one of the 6 4-hour periods each day. And then finally, I'm going to answer your question, and it was at least my question, how many times we can expect to see these moves to take place per day. So the data I have here is from December 2009 to May 2023, and time resolution is 4 hours. Observations, or the number of observations, is 20,677. And as you can see from the table, the mean or the average move over all these observations is 23 cents in the underlying. So you can see also from the table that we have quite a bit of upside deviation, and this is what we are interested in. We don't want to focus on small moves, smaller than average moves. We want to focus on this upside deviation. Let me show you why. So I have two charts here, silver in 4-hour and silver in 10 minute time frames, and what I've done here on the right hand side, I have highlighted a 4-hour period in this 10-minute chart with this blue shaded area. And with this orange bracket here, I show you the price range, the move that the market made inside that time frame or time period. So you don't really want to focus on a period where the market moves only 17 cents or 0.73%, because we already know from the descriptive statistics that this is a small move. Instead, you want to focus on moves that are bigger than average. In this second example, we have lots more volatility in the 4-hour chart, as you can see, and this 10-minute chart shows you that the move that took place inside this 4-hour period was roughly twice the average in this study. So this was spot $43. So in this study, we are looking at the trading day in 6 4-hour chunks. We want to know how the price moves from 2 a.m. to 6 a.m., from 6 a.m. to 10 a.m., from 10 a.m. to 2 p.m., and so on and so forth. In this graph, we have the averages for all price ranges in the data. So all the 20,677 observations are included here. The timestamps are GMT plus 2. The most volatile period starts at 2 p.m. So the European afternoon hours, when we have the European-US overlap, that's the most volatile period. But we have some good moves starting here at 10 a.m. already. So you might want to consider, based on this data alone, you might want to consider trading during these 2 time windows. Next, I want to focus on the greater than average moves in this time period, starting from 10 a.m. GMT plus 2. And immediately you can see in this descriptive statistics table that the average move is roughly twice the average move in all observations. That's significant. Already by focusing to this time period, you can have an edge for your trading, for your momentum trading strategies, provided obviously that those strategies have a positive expectancy. The maximum move was 2.54, and so it looks good. Next, I want to focus on this, the period that starts from 2 p.m. GMT plus 2. Let's go there. I have descriptive statistics for here, for the period here as well. And now the average move is $0.49 and the maximum is 3.44. So the conclusion is that by focusing on these 2 periods, the one that starts at 10 a.m. GMT plus 2 and the one that starts at 2 p.m. GMT plus 2, you can have more potential for your momentum trading strategies. So how often are the 4-hour silver moves greater than average? Now, in this study, the number of above average ranges during the highest volatility periods was 3,701. So here we are concentrating on those 2 periods, one starting at 10 a.m. GMT plus 2 and the other starting at 2 p.m. GMT plus 2. That equals to roughly one greater than average move per day, or if we are exact, it's 1.139 or roughly 22 trades per month. Obviously, these are not equally distributed, these moves. You might have days when there are no greater than average moves, but if you trade long enough, the average over all the days is going to be roughly one big move per day. Thank you for watching, guys. Now you know how the silver market is likely to move at different times of day. If you like this material, give us thumbs up, subscribe to the channel and share with your friends. I'll see you on the next video. Until then, trade safe.